We are going to have a conversation with Semyon Dukach, Managing Partner at 1Way Ventures. Semyon, welcome to the show.
Thank you.
So let's introduce our audience to yourself as well as to 1Way Ventures.
So 1Way Ventures is a seed stage venture capital fund that backs startups founded by the strongest immigrant entrepreneurs in the U.S. and Canada.
And what is your background, Semyon?
Well, I was myself an immigrant as a kid, a refugee actually from the Soviet Union, and I had a computer science background. I did some work at Columbia, at MIT on internet protocols, and I also, as my first startup, I ran the MIT Blackjack team, which was the basis for the movie 21 many years later, and that was my first fund as well. After that, I started an actual software company called Fast Engines, which grew in the 90s and was sold in early 2000. And for the last 20 years, I've been a full-time investor, most of the time as an angel. But then 6 years ago, I took on the Techstars Accelerator in Boston, which I ran for a few years. And in 2017, I left Techstars to start 1Way Ventures.
Okay. And how big is 1Way Ventures? What is the fund size?
Our first fund was $28 million, and we are currently raising a larger second fund.
Now, what stage do you like to invest in?
Our sweet spot is the seed stage, so the institutional seed round of a couple of $1 million. But we do a little bit of pre-seed and quite a few Series A's as well, where we're not going to lead a Series A round, but we participate when they're very high-profile, immigrant founders. We tend to participate in those Series A's as well.
So your definition of seed is a $2 million check or a $2 million round?
Yeah, a typical institutional seed round is these days around $2 to $3 million. Sometimes it's $5 million, sometimes it's a little less. And no, our check size was smaller. In Fund 1, we typically had a $500,000 check size, but we would still sometimes lead these $2 or $3 million rounds with a smaller check, which is a little challenging, but we did that a number of times. Other times we joined other seed VCs. And in our next fund, we're going to lead more often at that institutional seed stage. Our smaller rounds tend to these days be pre-seed rounds, or friends and family kind of rounds.
And what kinds of businesses do you like to invest in? What is your investment thesis?
Our investment thesis is around immigrant founders, so we're agnostic as to the vertical. We have four investing partners right now, and each of us has our own areas of interest where we look more than others. And these change over time as well. So I've done a lot of AI for various industries. I've done some stuff in outer space, actually, in Fund 1 personally. My partner Alex did a lot of fintech. My other partner did some enterprise tools. So there's a range of industries that we cover.
And what about geography?
So we mostly invest in areas where we physically are located, which I'm in Boston, and we cover New York quite a bit. And then we have a venture partner in Montreal, and our other partner, like our full-time partner, is in the West Coast in the Bay Area. So we cover LA a little as well from there. So it's usually those locations. Sometimes we participate when there are very, very strong lead VCs who we know really well in other places. But we're certainly not going to lead a company we don't already know that's not in our core geographies, because we need to spend a lot of time with founders.
And how close is your activity portfolio within the MIT community?
Well, we have quite a bit of stuff around MIT. I mean, I'm physically in Boston since I went to MIT 30 years ago, so we a lot of stuff is out of Harvard as well and other universities. So yeah, I think that's one of our areas of focus is like IP heavy kind of startups with defensible tech. Like some of them come out of those academic places, but then we have other kinds of startups that from other places. Like I mean, a lot of our deal flow comes from other portfolio founders who we know. So because I've been investing for so long, right? There's like over 200 companies I've been involved with on some level, and they tend to know other founders. And then we also see a lot actually from our investor base. Our LPs tend to be also more successful, typically entrepreneurs who've sold their companies who are now investors in funds. So we see a lot of stuff through their network as well. So it's not all around universities, certainly.
Yeah. So let's do some case studies of what kinds of projects you have invested in. And actually, since we both have a soft corner for MIT, why don't we start with a company that you have invested in out of MIT, founders out of MIT, that you feel particularly good about?
I don't know. There's so many companies, right? Out of MIT, there's a number. Corvus Robotics is out of there, although we met them after the Y Combinator. Kibotics is a very interesting, kind of very technical company that where we led the seed round that came out of sort of that Harvard, well, more Harvard, but still.
Hang on, Semyon, hang on. The way I'd like to do this, you pick one. I don't want a list of companies. I want one company that you take us through how you encountered them. What did you see? What were they doing? What did you see in them that made you want to write the check? And, what is special about that company? And what I'm trying to do here is to give our audience a view into how you think about, which companies you want to invest in. Besides the immigrant issue, there's also, I'm sure there's a business analysis, there's, other kinds of factors that you think about as you decide whether or not to invest in a company. So that's what I'm trying to
do. Of course. Yeah, I mean, we mostly look at the size of the opportunity, right? We look at the strength of the founders and the size of the opportunity and the defensibility of the tech. So let me talk about Kibotics. That's one interesting company that's out of the Harvard, MIT, kind of Boston academic world, where we actually were the first investor, and we led a large seed round for them. And it was, in their case, the institutional seed came, before revenues. It came very early in their journey, before product really. And it was a $5 million round that three other VCs followed us into, and it was, very full and all that. Since then, they've raised a larger Series A as well. But at the time, this was 2 years ago, they were they had a very, very unusually strong, a team of co-founders. So Professor Alanas Puroguzik was kind of the original chairman, and so he's, one of the top authorities, in the world of AI for material science creation, right? With hundreds of papers published. He had a big lab at Harvard. And interestingly enough, so he was kind of an immigrant from Mexico, but he was a little bit political. He wasn't happy with Donald Trump getting elected, and he ended up leaving the United States and moving to Toronto. So like Justin Trudeau personally recruited him to take his whole lab to Toronto. He set up a big thing there. It was a real loss for Harvard and for America, I think, and not the only one. But anyway, so he was the academic kind of co-founder, and then there were 4 other postdocs that were extremely brilliant scientists in this space, every single one of them. So usually, you get in a study to get 1 or 2 people like that, but this one just had a lot of academic depth. And they were all immigrants in different places, Germany and Russia, Ukraine. And then the CEO, who joined them just slightly later, she was also, all of them were chemistry PhDs in addition to deep machine learning people. But she was also a Harvard chemistry PhD who had previously built bootstrapped a company to, some pretty significant, interesting revenues. But in this case, joined as the business leader, as the CEO. Anyway, so that's, in that case, why did we do it? Is because of the defensibility, of the depth of technical differentiation in terms of their work relative to what other folks are doing, and because of just the scope, the scale of the opportunity. It seemed if they can kind of displace the big industrial chemical companies in the world of inventing and creating new materials, then they would probably be larger than them, right? Because then those companies would just manufacture them, and these guys would invent them, and that just seemed potentially $100 billion plus kind of opportunity that justified a little bit more risk of us, investing in this kind of round before the product was even complete.
Mm-hmm. So you are okay if the team is strong. You're okay with investing pre-product.
Well, it takes more than a strong team, right? It takes in this case, the team, in my view, was clearly the best in the world. There was no way that another team with more money could just be stronger than this one. So it's not just a question of strong. It's a question of being literally number one. It's very unusual, right? Generally speaking, I would say in most of our investments, there's product or revenues typically already their customers.
Okay. So let's take one of those examples and the more typical case of where you already have products, already have some revenue. What's a good example of something that you want to discuss, and what did you see in that when they came to you?
Sure, we can look at a company. I don't even know. We have so many, right? One well-known one in our portfolio that some of your viewers might be familiar with is called Brex. It was another fantastically strong, very young team in that case. Brazilian founders who built several companies when they were still teenagers in Brazil. Literally like 3 by the time they were 18, believe it or not. Like, I think the first one they built when they were 15 and they sold it, they got $1 million, and then they started another one, they lost all the money, they had to move back in with their parents. They started a third one that actually grew large, and then left and went to Stanford, left like 3-4 months at Stanford, and went off and started another one, which went to Y Combinator, pivoted, and then became Brex. And in this case, the guys were so brilliant as entrepreneurs. We probably would have come in pre-product, but by the time we had our fundraise, like, they had already launched and they had extremely fast-growing revenues, and we were fortunate to get in a little bit later than we usually do. But then, their growth just continued, and I think less than a year later, they were worth $2.5 billion at their most recent round, led by Kleiner Perkins. So, that's a story of like extremely rapid growth, and in this case, actually, they had the ability to raise a lot of capital as well, right? They had a lot of credibility and momentum.
And you are looking for unicorn investments?
Yeah, every investment we make, we want to see a realistic path to multi-billion-dollar outcomes. We will never invest in order to make like 5 or 10 times our money. We just don't do that. It's worthwhile. It's just not something we do.
Okay. What do you see in your deal flow at this point? If you look at, in 2020 especially, the deals that are coming to you for investments, what trends are you seeing in there?
We've been fortunate, I would say, especially in the last few months with COVID. I think we've been able to come into some of these like Series A, some of these larger rounds where I think on one hand, the immigrant founders who can get money from anybody, they tend to value our story a little more right now. Like the fact that we have a fund that only backs immigrants, it's something they find appealing, and sometimes we are invited to participate more, I think, to benefit the fund than to benefit the company. Of course, we always try to help the company as much as we can, right? But sometimes the founders are just so strong that really they're letting us in to do us a favor. And I think there's been a little bit more of those for us recently, just because I think everyone is moving slightly slower, right? And even when people are about to raise a much larger round, they're more likely to take a little bit more in from people they like on the previous round's terms, let's say, just in case, just because things might take slower, the world is less predictable. And also, I think we've seen a lot of tailwinds, just frankly, overall in our portfolio companies. We've seen a couple of companies struggle with COVID-related things and quickly kind of change their business and begin to benefit from them. But the majority of our companies just immediately got tailwinds for various reasons, like their business just benefited from the fact that people are online more, and people are, tech is just progressing faster than it was before.
Have you seen new companies, new projects that are specifically reacting to the discontinuities introduced by COVID, and what are those trends?
Yeah, we've seen a lot of people, direct to pivot to COVID-related things. And we did invest. Actually, we led a round, and this was early. It's kind of like a pre-seed round. Company out of Techstars, actually in Boston. The program I used to run, but they went to it later. A company called Brio, which they kind of shifted a little bit. They were doing blood tests for people in gyms and firefighters, like for health tracking, blood work. And they were doing like the online interface, connecting the labs to the consumers. And with COVID, they went straight to COVID testing. and we ended up doing this. I think it was a $2 million round altogether that we led in early March or mid-March. It was closed. So right as COVID was getting serious, and that company, you know, their numbers just like, of course, astronomically took off. As you might imagine, the COVID testing is such a growing, fast space. And they're doing quite well. They're actually making millions in profit, which is very unusual for a venture-backed company within a year. But like they're generating cash. They're not going to do the next round. They don't need to do another round, or they might eventually, but not anytime soon. But I would say since then,
that COVID testing, that's their original technology, or is it COVID testing pure process that the technology is from somebody else?
No, these guys aggregate a bunch of labs. They work with many labs, and they provide the user interface layer and the reporting layer. And they work with organizations, enterprises that have to test large numbers of people, and they coordinate all that online. So these guys don't run their own lab. There's also a lot of startups with unique labs and so forth, but those have a longer time scale. And yeah, what I was going to say is that like since then, you know, by like June, I was seeing people forward all kinds of plans for all kinds of like, we are pivoting to COVID this or COVID that, or, you know, we used to do some kind of face recognition, and now we're doing temperature checks for people when they come into the workforce. So, you know, at this point, there's so many, it's like that's almost an automatic delete, right? It's like once you get a boom of some new fad, you know, when everyone starts selling the same thing, of course, you just ignore it as an investor, right? You want people who do it before everyone else.
We did a case study in our Entrepreneur Journey series recently, actually, not very long ago. In 3 months, they did $8 million. They started the company post-COVID. It's a mask and PPE company. Mm-hmm. In 3 months, $8 million.
Yeah, no, of course. I mean, some of the stuff happening very quickly. It's another story as to whether it'll be sustainable after the epidemic ends, right? But yeah.
Well, you know, good entrepreneurs, as you were talking about this Brazilian team, you know, good entrepreneurs can also figure out how to be sustainable. If they have a good core business going right now, they can also figure out what they're going to do after COVID.
That's exactly right. Yeah.
All right. Now, are there labs or particular departments at MIT that you have closer relationships with than others? Like you've talked about AI. Do you work with the AI lab?
I mean, I was in there myself as a grad student years ago, but no, we don't typically work with anyone in the university like that. We might go to some of the demo days of the various, you know, startup organizations, right? Like the 100K competition or whatnot, or, you know, the Trust Center. There's a bunch of these, or the Despondent Center. But no, you know, we at the end of the day, like we're not the engine, right? We're not a fund that's equipped to take like a 15 or 20 year stance on some core tech like fusion. You know, that's like very far from commercialization. We are more traditional capital. What's that?
That's not the domain of venture capital. I don't think 20-year research and development is the domain of venture capital.
Well, exactly, but there are some funds that go longer, like the engine. The engine is affiliated with MIT, and you know they have I don't know about 20, but they have a longer time scale than most venture funds, and they do very deep, you know, pure research kind of thing. So we don't do very much of that because I mean, you know, we don't have sufficiently large funds to be able to support companies on our own that long.
All right. Okay, well, very good. Good to meet you, and good to get a view into what you're doing. And the immigrant founders, of course, our community is full of them. So we'll connect the dots as they come up. Thank you for participating today. I'm sorry we had the difficulty at the beginning with the technology, but
great. Thanks for having me.
Bye bye.